In order to understand the business of this country, you have to understand the politics of this country.
The issues on the table in this election are really core issues.
The stories behind the stories, you're going to hear it first on Capitol Report.
Alan Murray and Gloria Borger host Capitol Report, weekends on CNBC Asia.
Good morning and welcome to Squawk Box. I'm Mark Laudi. Over the next hour, we're going to spend a lot of time talking about China, about the IPO market, which some folks say has lost its luster, and conversely, a look at what's happening on the M&A front, which is red hot right now. Good morning.
And good morning, everyone, from Hong Kong. I'm Eunice, Yoon. We're keeping an eye on the banking shares in Japan, particularly Sumitomo Mitsui Financial. In addition to that, Promise as well, which is a consumer finance firm. This is because Promise, on talk that Promise as well as SMFG are in talks for a capital tie-up. SMFG is currently trading higher by 0.2%.
Good morning, I'm Philip Yen. Energy in focus. Singapore's Keppel Group looking to build a 400-plus megawatt facility worth $500 million in Singapore. Of those details coming up.
These are live pictures from the rotunda at Capitol Hill, Washington, D.C. Just a few moments ago, the Vice President, Dick Cheney, spoke at this private ceremony for the late President Ronald Reagan. The Vice President thanked Ronald Reagan and credited him for practically bringing the Cold War to an end single-handedly, that he met deceit with truth and evil with good. He described him as a graceful and gallant man, and while he says that nobody could take away the sadness that his widow Nancy Reagan would be feeling at this time, he remarked on her courage and for standing by her husband through the last 10 difficult years. This is the private ceremony. We'll also continue to bring you coverage of that as the day progresses, as well as the public ceremony, which will be held at the Washington Cathedral tomorrow. The president's casket and family make their way back to California on Saturday for the burial and the final resting of the president at the library that was named after him in Simi Valley. We'll return to those pictures as the morning progresses. In the meantime, a look at the markets which have just kicked off trade in Asia. Japan, Korea and Australia. The Nikkei 225, 0.7% lower this morning. 11,374 is the level there. In Korea, the Kospi's kicked off with a 1% decline, 785. And in Australia, the benchmark S&P ASX 200 index also slightly on the downside this morning. New Zealand saw an interest rate hike this morning. That wasn't significant. We'd been expecting that. But the commentary from the Reserve Bank of New Zealand was that there are likely further rate hikes to come. In fact, maybe not just one, but possibly even two. The concern is that the inflation rates seem to be moving higher than previously expected. Alan Bollard, the governor of the RBNZ, saying in the statement that at this stage, further increases in interest rates look likely to be needed over the year ahead, but a modest degree by historical standards. The first quarter consumer prices were up 1.5% from a year earlier, and with the target band at between 1% and 3%, the average obviously 2%, the prices are starting to approach that level. Now, Eunice Yoon joins us for a look at the opening numbers on the stocks that she's been following this morning. Eunice.
Thanks a lot, Mark. Well, we're watching right now the Hong Kong market just because right in Hong Kong, we're expecting to hear from or see the big debut of a company here called China Mengniu Dairy. This is China's biggest liquid milk producer, and it's also one that people are closely watching because they're wondering whether or not the IPO mania for a lot of these Chinese issues is returning, whether or not that appetite is returning or not. And it looks as though, just if you look at what the chatter is at this point about China Mengniu Dairy is that it could be the beginning of another, a run for Chinese IPOs. At this time, people are expecting China Mengniu Dairy to gain more than 20% on the first day of trade, possibly as much as 27%. It is a consumer play. People are saying that it's a good way to buy into China's consumption boom. So we could see a warm reception for China Mengniu Dairy. It was more than 200 times oversubscribed in the retail portion. Like I said, beginning trading today, Mengniu was priced at $3 Hong Kong and 92 cents. It raised $176 million in an IPO, which managed to top the end of expectations because of the improving sentiment towards a lot of these Chinese issues. Now, some of the other companies and Chinese issues that people are watching are the IPO of China Shipping Container Lines, and in addition to that, Ping An Insurance. China Shipping Container Line is the world's number 10 is the 10th largest container line. It's planning to raise up to $1.3 billion. People are saying that the firm managed to close their subscription to the retail tranche of the IPO on Wednesday. It's supposed to price the offering Thursday. The company also had said that it had raised the retail portion to 7.5% of the shares on offer from 5%. As for Ping An Insurance, it also plans to raise between $1.7 billion to $2.1 billion by selling 1.388 billion. 8 shares, or about 22% of the company. Now, let's talk with Philip Chan. He's a research director at Shenwan Securities to talk a little bit more about the appetite for Chinese IPOs. Philip, thanks for joining us this morning. What do you think of Mengniu Dairy? Do you think that it has a good future?
Yeah, it looks like it's got a pretty good future. It's a pretty competitive market, the dairy products market. But in terms of volume, it's the 4th largest, and it can, it's still working from a pretty low base. It's got a chance to grow. I think it'll probably do well.
Philip, the question here also seems to be to what extent we can perhaps expect some nasty surprises. Can you characterize Chinese IPOs, particularly for those people who might have felt burnt by some of the problems associated with previous ones? I'm thinking here, of course, of the likes of Ping An most recently and China Life before it.
Yeah, I mean, the thing is, a lot has been done on the regulatory and the corporate governance side for China companies in recent years. But you're always going to have odd cases coming up, and also it's a transitory type of situation. It's getting better. It's still not perfect. So. But generally speaking, if you would say the block of Chinese companies that have listed in recent years, and we've had a lot more of them, they are much better quality than, say, we've had, let's say, 10 years ago, or even, the block that listed, say, 6-7 years ago.
Philip, a lot of people are expecting to see the share price of Mengniu Dairy rise by 20%, possibly up to 27%. But, here, when you talk to fund managers, they're always talking about how Chinese IPOs are flipped. The people buy into it, they flip the stock, and then they're out. Do you think that we're going to see this trend continuing, even with some of the larger issues, such as Ping An, as well as China Shipping Container?
You'll always see that at the beginning. Given the retail portion was quite heavily subscribed for Mengniu, there could be quite a bit of flipping at the beginning, but then you'd expect some good support afterwards, maybe in 2-3 weeks from now. So in months ahead, probably the support for the price will be quite good as longer-term investors pick up the stock in the secondary market.
Phil, to what extent do you feel that China-based companies that are publicly traded are better investments than companies outside of China that feed the big demand in China? Is there a trend here that perhaps the companies that supply China are better poised to capture its growth than those who are actually based in China?
No, it's case-by-case basis, I think. You know, you can't sort of argue on like I said, on a blanket basis. Some of the companies in China, it's better to buy them direct, even though you may have, say, some problems on corporate governance. As I said, a lot of the state-owned corporations, because they're controlled by the state, if something goes wrong in the company, they can be replaced quite quickly. Private enterprises are more difficult to deal with. So you've got some sort of safety net there in that respect.
Philip, how do you sort through all of these Chinese IPOs? I mean, there's so many that were coming online in the past several months, I should say. I mean, how do you really choose which ones are fundamentally sound?
Again, you know, it's impossible to generalize because because you don't know exactly the makeup of the say the types of sectors which are going to list, companies within sectors, I mean. But you just have to look at each one on a case-by-case basis and determine, say, you know, the type of company it is, the sponsor, and what kind of aftermarket activity you expect in the stock afterwards. Obviously, consumer products companies in China are the flavor at the moment, so that's why this menu is quite well subscribed.
Phil, you might have already preempted my last question with that answer, but I just wanted to follow up anyway to see whether there is any distinguishable trend in quality of companies or performance of companies that have listed in, for example, Hong Kong versus those Chinese companies that have chosen to IPO in, say, Singapore.
Well, in terms of the quality of the companies, there may not be a drastic difference if you're just saying on a broad view. However, in terms of the investor interest and also, say, aftermarket activity, unfortunately, you know, many Chinese companies that list outside of, say, the usual markets, say Hong Kong or within China, they tend not to get the liquidity which they want. Unfortunately, as I said, most of the big Chinese companies list in Hong Kong or within China, and that's where the interest is.
All right, Philip Chan, Research Director at 10Jun2004 Securities, thanks so much for joining us. Let's very quickly go back to Washington, where we have pictures coming in just at the moment of